Hi, Tara Christie, President and CEO of Banyan Gold, here to talk about Banyan's exciting AurMac project. 2021 was a great year. We put out our 4 million ounce resource on our AurMac property, and we've drilled 50,000 meters, of which we've been announcing results steadily and continue to announce results. Moving towards a resource update here in 2022. We're well funded, about to start exploration here again in March. It's going to be an exciting year. We've got a really clear plan on how to continue to add value for shareholders, and we've demonstrated that we follow up on what we say we're going to do. So great to talk to you again here, Matthew, and look forward to your questions.
Good to see you again, Tara. Lovely to see you again. Happy New Year to you and all your shareholders. You hit upon a few things I want to get into, which is obviously having a clear plan, and of course you've raised some money. But first, a little bit of reflection. For you, your share chart is unusual. So general trend is up. For a gold exploration company, that is unusual in 2022 and even 2021, quite frankly. What do you put it down to? What are the kind of moments last year which kind of defined success for you?
You know, it starts with getting good shareholders. And, you know, when I took over the company in 2016, it already had quite a few shares outstanding, but I really had to go to the market and find shareholders who understood the story and were willing to invest in me and my management team. And so that was the start of it, because the people that I've primarily placed in the financings are people that know this is a longer term game and understand where it's going. Then it's quality asset. You know, that's another key thing. And then you got to have a plan as a management team and deliver on what you say you're going to do. And we've done that. And the geology was there. We believed it was there. We put together a geological model. We told people what we hoped to achieve with the money that we had. We went out and did that, and we were efficient. You know, you look at our exploration costs, $5 per ounce is excellent cost for an exploration company. It shows that we really are using our dollars efficiently. 85% of the dollars we raised to date have gone into the ground in exploration, so we don't have a big overhead. So I think that's really helped us to develop shareholder trust, along with getting the right shareholders in the registry. And that's something you continually have to do, is make sure you've got the right people behind you and communicate what the plan is so that people aren't disappointed when X happens, or, you know, surprised when Y happens. It should be a pretty straightforward story. And sometimes we're criticized because our story is too straightforward. Okay, we're going to go here, we get there. Okay, next plan, we're going to go here. But that's part of what I think exploration needs to be, is to tell a story and then deliver on what you say you're going to do.
Right, okay, so having the right shareholders and communicating with them clearly about what you're going to do and then delivering it. It does sound easier than it probably actually is, but the asset component, right? Okay, so you're 0.6 gram per ton asset, 4 million ounces, which is great. You're building real size there. But again, there's an audience of people who think, okay, well, low grade gold is hard to mine. So you've obviously got a nice base, but you want to kind of build the grade component to this. So how are you going to go and do that?
Well, I guess before we say that low grade, the thing that you need to have when you have low grade is scale. And that's something that we have in spades. And I guess just look at the Powerline deposit itself. And remember, Powerline was a brand new discovery in 2019. So we haven't had tons of time, lots of projects to get to 4 million ounces, get 20 years of exploration. Powerline 2019 was the discovery holes, 100,000 ounces in the original resource in 2020, and now just under 3 million ounces by our resource that we put out in 2021. And what's also really important when you have low grade is strip ratio, 0.34 to 1 on Powerline. That is an exceptionally low strip ratio on surface. That makes a huge difference. So those are, when you look at grade, you got to also look at how much material do you need to move to mine it, which is your strip ratio. So yes, this is a hard deposit to find because we do not have what some other companies have, you know, big exposure of rocks on creeks and hillsides. We have low rolling topography, which is great for mine building, and kind of swampy, lots of cover, not a lot of exposure. That makes it a little more difficult. So we've got to use our database. So finding that higher grade is hard. But if you saw our press release this morning, we're seeing two distinct trends at Aurex Hill. And we can see these east-west trends. We see it through Powerline. And we're seeing that 1 gram material, and we're really excited, looking forward to what we've got from the results. We've got another group of holes that are 1.3 kilometers out to the east, which some of those are right in that trend area. So we're looking forward to getting those. Do we think we're learning how to target higher grade, and do we think there's some there? Absolutely. And the other thing, if you went back to our resource and you looked at the sensitivity table at Powerline, we chose 0.2 because at big bulk heap leach, people really want to see scale. But if you'd have chosen 0.5, we would have still had 2 million ounces at just under a gram. So that, when you look at it like that and how we model this, we aren't at our PEA yet, but we'll have optionality when we get there, when you have scale, and when we're going to find these areas, which we know are right near surface that have higher grade. There's ways to design your mine plan when you get there so that you maybe mine the higher grade, particularly if it's at surface, sooner in the mine plan, so you get earlier payback, and then the lower grade stuff later on in the mine plan becomes gravy. You look at Kinross's Fort Knox, and they're effectively putting run of mine on their heap leach pad, and they're making lots of money at it. So and it's like 0.1. So that's been a tremendous success story. The key is getting your capital paid back by having a good mining plan that actually gives you that higher grade first. So is it there? Well, we're still working on it. And I think what we're doing this winter is really digging into our database. We've hired a few technical experts, which bring some new perspectives and have seen this other places. And that's really going to help us in our targeting this year. So that's why we haven't put out our drill plans yet, is we really want to spend some time digging into the data, getting those results so that we can continue to deliver good results and show that this property really has a lot more to give.
Okay, and I did want to talk about Jason Neal in a second and some of these new hires, etc. But just, I think it's important there's a big new audience kind of coming into mining. Mining's a tiny, tiny sector compared to most other verticals, and the number of investors is huge if we can point their eyes towards this. But this low-grade component, you pointed a couple of things there in terms of strip ratio, the cost of capital, repayment of that capital, etc. But what are the other factors for you when you're looking around at similar true peer analysis? When you're looking around the marketplace and seeing who's succeeding, what are the factors that you need to be cognizant of when you're kind of building out this story for, let's say, someone else to come in and take you guys out and actually get this thing into production, or should you choose to go down that route yourselves? What's important to you?
Well, looking at our other peers, how do we compare? One, we get the scale. We haven't started to move to indicated yet because, again, we want to find those right areas before we start to convert it. But the thing we have that really differentiates us is our infrastructure. We've got a power line already across the property. We need 50 meters, that's meters, to get the power line across the highway to our camp. And yeah, you probably put in some additional on-site lines, but that is, and it's right to a hydroelectric dam that's only 50 kilometers away, so it's green power. That's a huge advantage. We've got communications already on the property. There's cell phone service. There's fiber optic cable already going down the property to Victoria Gold. That's a huge advantage. An all-season road that's maintained by somebody else. It's the main highway, goes right through there along with the all-season road to Victoria Gold. Those are huge, huge advantages, which, I look at what Victoria Gold had to do. They had to build a substantial amount of road. They had to put in the power line. They had to put in all their communications. Those are really significant costs. So that can't be underestimated. And the other really key thing is jurisdiction, security of tenure and security of permitting process. Yes, the Yukon has a tier 1 permitting process, which means it takes time and you have to make sure you get the community involved. You have to do the science right and the technical work right, but it does have a clearly defined process that you can go through. And there has been a heap leach mine that's been permitted in the last 5 years. And that's a huge advantage as well. So, whether or not we take it down the road and do all the technical work and get it through permitting, which our team is very capable of doing, or whether somebody comes along and wants to acquire us. I think it's too soon. That's one of the reasons why I think we're in a little bit of a race is we are getting to the scale where people are going to start to take notice, and we need to get this down the road enough so that we can really get the value that shareholders deserve out of it. Because, it's been a long journey, and this market, we're undervalued for where we should be in this market and in a better gold market. So that's the job that I have to do this year, is to get out and tell the story and make sure that, everybody knows about the project, from the corporates who might be interested down the road. And, corporates don't just come and say, hey, I want to buy that today. They need to actually get familiar with projects and jurisdictions. And I think Yukon, they are starting to get involved with. We see Newmont, Agnico, Kinross, have all made investments in various companies in the Yukon. So they have vetted the jurisdiction. But we do need to, as a company, make sure that we show why our property is better than maybe some of the others, and what advantages it has.
Right. Okay. But if you mentioned one of the names there, Victoria Gold. Obviously, they're looking at the MDA to end of September. They're at 0.84. You're 0.6. Obviously, that's a 30% sort of slightly over, a third increase on where you're at now. So the importance of the grade is real, especially when you sort of. I'll say this in the context.
But Matthew, they're actually 0.64 was their life of mine grade. Their first 2 years they mined 0.8. But we could, increase our cutoff grade and pick, 0.5 and mine 1 gram material for the first 2 years. And that's mine planning, not necessarily the grade of the deposit.
Okay, so this is where I get really important nuance here. Then obviously, you can sort of high grade. Well, Victoria, obviously going for the high grade because they want to kind of pay down any debt they have. Get to that kind of free cash flow position, because mining's tough. It's things pop up, things happen. You've got to pay for that, and there's an ongoing operational component to this to be profitable. Now, we could talk about the price of gold going forward, but I don't want to do that yet. I want to focus on for you. You've raised some money. You say, right, we think we may be able to look at some higher grade. There's a lot more work to be done. There's a lot more scale to be built out here. So what are you going to do with this capital? You did 2 raises last year, most recently in December. You're good for cash, so you got options.
Yeah, we started this year with 19 million, which was nice. And raising that money really was because of a good quality shareholder. It was only, there were 3 subscription agreements in that 12.2 million financing, and very solid shareholders. So if you look at our chart of how it breaks out, we now have basically 38% high net worth individuals and institutions, not including Franklin, which is 9.8%. And then we have Victoria Gold at 11%, Insiders at 7%, and a Cisco Development at just under 4%, which only leaves us 30% retail. So that, we really do know where our shares are now. That gives me a block of almost 70%, which I'm pretty confident is going to be there in financings when we go forward. So it's good, solid money. And yes, we use that new life financing with a no 4-month hold, which was a great thing to, some people like to use that not because they plan to sell the shares, but because of how things look on their balance sheets for liquidity and other things. But I think that's a good change for some Canadian companies. I think it'll be really terrible for, companies that are desperate to raise money, because they will have people selling right away. But what's important for us is now that solid shareholder base is really going to help us move forward. But we take that money very seriously. Our planning this year is, we're spending the next 3 months before we start drilling in March, and we've been messaging that we're going to drill 25,000 meters this year, which obviously we'll end up with that would leave us with a lot of money in the bank, which is one option. The markets are a bit uncertain, and my job as a CEO is to always make sure we have a very healthy treasury, not leave us in a position where we're vulnerable to the market or we run out of money. So we're being cautious in how we plan. Our project, we can ramp up our exploration anytime if we wanted to spend more of that money. Right now, we're targeting having about somewhere $9 to $10 million by the end of 2023, so that we could go into 2024. And we're going to wait and see what the market does here. We can ramp up and drill 40,000 meters if we want to, because our property we could access basically all year round. We shut down in December this year, about December 7th, I think we shut our camp down, and the weather got cold for a little bit, but we could be drilling right now if we wanted to. It's actually pretty nice weather right now for drilling. So some of my guys are like, how come we're not going now? But that taking a little bit of break to do the technical work and really think things through. We have a huge database, and some people do have that exposure I was talking about, the biggest value we have is our database of what we've drilled and what that's telling us. So doing some work on that and really setting ourselves up well for this season will help us spend our money really efficiently.
Right. Okay. But I think most CEOs wanted 2022 to finish halfway through 2022. But look, here we are. It's a new year, new opportunity. I say your general trend is up in terms of the share price. That's what it's all about for investors. But for you, you can't rest on your laurels, right? You've always got to keep this thing moving forward. You mentioned some new hires and do some of these technical analysis. Why have you done that? Why bring in the additional cost?
Well, it's to look at things a little bit differently. We got this far with our geological model, and we've been very successful. But again, targeting that higher grade, understanding where there may the intrusion or intrusions might be that are feeding this system. It's obviously a very large system. We have 5.5 kilometers now where we've got mineralization. And remember, the resource of Powerline is only 1.2 kilometers. We've now got 5.5 kilometers. Well, have we found all of it yet? Do we think it continues further? We do. But where are our best targets? That's a lot of area. And to drill it all off, it's going to take a very long time and a lot of drill holes. So if we can be more strategic in how we spend our money, and if we can find some of those higher grade areas, it really can change the story. We have got a few holes out there which will show that, yep, there's lots more of this low grade, or if you 0.6 is low grade across the property, but where's that higher grade? How can we find it? How can we target it? The other key thing that we've brought in help in is on our metallurgy. We're planning a very robust program. We spent quite a lot of time. The first part of it was getting the samples organized. 5.5 kilometers of strike length, that is a big area. You can't assume it's all the same, making sure that you actually get the right samples and enough samples to the lab, which we did this fall. We got them all shipped off so that now we can do a robust testing program throughout 2023 and really make sure we understand the metallurgy of the deposit and across the deposits. Powerline and Aurex Hill really are the ones which are more exciting. But remember, it's early days. People say, why haven't you done all the metallurgy yet? Remember, we only made the discovery in 2019. Our first resource was 2020. For metallurgy, that's really not a long time because, the leach cycles, if you look at Victoria Gold's 150 days. So that's why you want to make sure you're doing it right, because it's not only an investment of the money into metallurgy, but it's time. Once you've started something, if you haven't got the right things going on, you're going down the wrong path, and it's taking you a long time to find that out. So I'm not a metallurgist, so we made sure to hire both a consultant that knew what they were doing and worked at heap leach mines, but also an advisor to help, kind of like, you always have in the Army, the people that ask the questions from the other side, to take the negative point of view just to make sure that you're asking the right questions. And I think that's part of what you need to do, because as you said, lots of different things can happen in mining. There's been lots of projects which come up with challenges which were unexpected. And so we're trying to check off all those things well in advance of a PEA. We're starting to do some more work on the geotechnical, making sure that, our logging this year will help us get that information. And we bought some extra instrumentation to help with that. We're expanding our baseline environmental program because you need to have 2 years officially, but really 3 years of data. And we did start our program 3 years ago, but it is time to ramp it up to get more data. So this project could be in a position to be permitted as soon as, we figure out what the project is. So that's all in the works for this year, which is a lot of behind the scenes works, but and some of it's not very exciting, but it's really important to de-risk this project and really set it up for success.
Right. Okay. So are you committing to a time frame for the resource update?
We've been saying by mid-year. We want to get all of our assays back if we can, or at least most of them. We do have the advantage now of having that on-site prep lab for next year, which I'm super excited about. Should get us month and a half timelines from when we get the samples in. And it also reduce our costs. We aren't going to have to ship all the samples to Whitehorse to the prep lab and bring them back later when they want us to move the material. That's going to be a huge logistical, people time saving, money saving, and also give us our results in a much quicker time. So that's another thing that will be a game changer for us this year, and a huge advantage.
Absolutely. And it leads on nicely to something which most companies have been avoiding last year, which is then putting out some numbers behind it, an economic study behind it, primarily because the inflationary environment everyone was operating in last year, it was terrifying. People got penalised if they did. They got penalised if they didn't. Different companies came up with different strategies about how they manage that narrative in the marketplace. What's your view on that? You haven't made any commitments yet, have you?
So the only commitment we have is to earn 100% on our property. We have to do a PEA by December 2025. So that's lots of time. And market timing is everything, as you know. And the first key thing is to have your project that you know is going to be economic. You never go into your PEA without actually knowing where you think you're going to end up. Yes, there can be some variables in it, but on the geology side and the mining side, before you actually announce when you're going to do it, most people, I would think, have most of the answers already worked out. Otherwise, you're playing a pretty risky game. And that's not something I do. I try to be very methodical in how we do it. We add value when we do our PEA. Doing it in a market where it's not going to be appreciated, like last year, would not have been a benefit for anybody. So you're better to just sit on your cash and wait than to do that. Not that my shareholders have given me the cash to do that, so that's not my preferred. My preferred approach is to move this forward as fast as we can, adding value for shareholders, but being a little cautious. I'm not going to put us in a position where if the market's not going to appreciate it, that we're rushing to do some study for the sake of doing some study. People know what these projects are. Key thing is find that grade, get the scale, and make sure people understand how valuable that is in this jurisdiction with the infrastructure that we have.
Right. Well, Tara, that's great update. I think I get some reassurance from the fact that you've got money in the bank to choose your timing on things that you want to feed into the marketplace, where others haven't. So I think that's good news. I'd be intrigued to sort of see what the new team come up with in terms of a plan, drill plan. Maybe come back on and tell us about what you think that looks like for 2023, albeit at a kind of paced rate. So I appreciate your time. Good to see you today. Well done on last year. You seem to be. I think do you think the gold market is going to do you any favours this year, or do you very much believe, well, we'll control what we can control? I mean, you've got to have a view on gold, though.
Oh, I'm a gold bug. I've been a gold bug since I was 10 years old, so that's not going to change. And that's partly why I have to always have that careful side of me planning. Do I think we're going to have the opportunity? Yes. And so our planning involves that really ramp up as well. That ability to is always there so that we could advance this very quickly. And that's part of getting the people in place, making sure we understand where our best targets are so that we have that optionality. I think the next couple months will be pretty telling. We always go into, March when there's the PDAC and sometimes that's good and sometimes that's not good for the sector. I'm planning for good, and I'm excited about, even where we've started this year. I think there'll be some good news for miners, and certainly our plan, we're gonna add a lot of value for shareholders. I'm excited about our team that we've built and what we've got in place for this year. So, and again, having money in the bank, we actually can just focus on the technical work that we need to do and how we're going to deliver. We don't have to be stressed out about what the market's doing day to day.